Hey guys, Crypto Sunday, and bit of a meaty pullback compared to sort of previous month or two. We're down about 9%, 45,000 according to the current price here, which is always a little bit volatile. But yeah, mostly on the altcoin side. Not really like the last week, but there you go. Looking at the coin shares report, so this is for the week before last, just under 2 billion, 1.9 billion of inflows. After the hawkish cut, as they're calling it, by the Fed, sort of no guarantees of further cuts, and sort of data since then possibly indicates that they won't come. So, yeah, the crypto market seems very tied to sort of rate cuts at the moment, where gold and stocks don't particularly. But yeah, we've seen, so again, week before last, 977 million into Bitcoin, 772 into Ethereum. That's got quite a bit worse since then. Again, though, 38 million coming out of multi-asset. It's the only one with a negative, but yeah, not sure quite why that is. Nearly 8 billion in assets under management, so they're quite big ETFs. 127 million into Solana and just under 70 into XRP. Sort of these two still continuing on their reasonable gains. That is certainly reasonable. 2 million into Sui. That sort of had been getting a little bit more than that, but it's okay. And then a little bit into Litecoin, Cardano, and 2 million into Chainlink. Isn't too bad at all, over 1%. Tiny bit into others. And the country breakdown, presuming Germany and Switzerland are where the Solana and XRP flows are coming from, because there's no proper registered ones in the US other than the Rex Osprey one, which doesn't come anywhere near 127 million. So yeah, that's looking pretty good. And some sort of fairly small numbers elsewhere. 21 million from Canada, not too bad, and a little outflow from Sweden. Looking at the most recent week, though, as I say, it has got rather substantially worse. We've got a net outflow week. Monday, we saw 360 million out, zero from BlackRock, admittedly. 276 million from Fidelity, so that's quite a chunky outflow, and a little bit coming out of the old grayscale. Tuesday, 103 million out again across the sort of the top three, excluding BlackRock. 2.5 million into BlackRock. Wednesday, we did see inflow across the board, 241 million, so that was pretty good. 128 million into BlackRock. Thursday was 250 million outflow, but again with inflow into BlackRock, 80 million, and the outflows coming from everyone else. And then Friday, BlackRock even gave up the ghost, and 37 million outflow, 300 million from Fidelity, so they're clearly not happy, and 418 million overall. I suppose some of this could be basis trade related, not necessarily people just selling out because they're unhappy with crypto. It could be, buying back futures as they're selling these ETFs, and it's just, cost neutral. But who knows? Looking at Ethereum, it was worse, even worse than Bitcoin. Net outflow every day, and the only positive numbers were a very small one from the 21 shares ETF on Friday, and yeah, a little bit into the old grayscale. So this is just sort of trading, momentum type stuff. No one's wanting to hold that long term. So yeah, nothing from BlackRock. A couple of 0 days, but yeah, 76 outflow. 140, another 80, and then 250 million days, with 200 million out of BlackRock. so you don't see that all that often. And the Solana one, maybe because it's still a little bit newer and people are sort of wanting exposure, actually had just net inflow every day. 27 million, 2.5, 3.3, 16 million, and 10.5 million on the Friday. So quite surprising. I thought even Friday seemed to be very, very negative everywhere, and they still got 10 million in. So maybe it is because they're the only Solana ETF, I believe, in the US, sort of waiting for competitors to get approved. Rex Osprey sort of got in kind of cheating, kind of by the back door, and they are 0.75% fee, so it's not as if it's super cheap, but they're certainly getting a head start. 307 million in inflows, and assets under management more than that, although it's taken a bit of a hit this past week. Looking at some of the treasury companies, Metaplanet actually came out with the sort of biggest news of the week. They bought 5,419 Bitcoin for $630 million, which quite a sizable chunky buy. They did buy it at 116,724, so 7,000 above the current price. Not ideal. Takes them up to 25,555. They like their round numbers, it seems, and 2.71 billion, and their average is 106,000. So pushing up that average. The average is now only 3,000 below the current price, where they were sort of one of the strategy type low average companies, and all your Nakamoto's and 21 and people like that were buying at current price. Metaplanet were sort of, I think, in the low 90s at one point, higher than strategy, but lower than the current price, and they've now come right the way up to pretty much current price with this big buy, especially at 7,000 higher than current price. Strategy bought 850, so quite a lot less than Metaplanet, for 99.7 million. Again, 117,000 they paid for it, so quite a bit above. And it doesn't really affect their average. They now hold just shy of 640,000, so great for them. Capital B, another one of the smaller companies, acquired 551 Bitcoin, so that's pretty good. They report their average price in euros, so it's worth noting that's not a low dollar average. Smarter Web company with their sort of small purchases now, 55 Bitcoin, takes them to 2,525. They're not able to do a huge amount of stock raises, it seems. And I don't think there was a huge amount else. Interesting, another small company with the HODL ticker. First British company founded for Bitcoin accumulation. Not quite sure that's true. Obviously, we have whether they're not counting Smarter Web company, and I think there's one or two others as well. But there you go. They acquired 100 Bitcoin, and that is their first purchase. So their average is 113,000. So they would be technically in the red straight away from their first purchase. Assume they don't need to be sort of paying anything back. And that looks like it was it. So this was interesting and sort of kind of funny, really. Vanguard are exploring, reportedly, there's sort of no 100% confirmation on this, but offering the crypto ETFs on their platform after sort of quite strongly saying that they had no intention of doing so. I think the previous CEO, they've had a bit of a CEO change not long after they sort of said no and these came out. The previous CEO said that they would never offer them. So, yeah, fair enough. The newly appointed CEO did work on the BlackRock Bitcoin ETFs. Yeah, Vanguard have sort of watched the Bitcoin ETFs go up. Sort of, I think IBIT is up about 148% since they launched. Not quite sure. This is Eric Balchunas, the sort of Bloomberg ETF, one of the ETFs guys, and he says Bitcoin had a bad week after going up 350% since the ETF approval. I think that's a typo, but there you go. We'll have to see if Vanguard do get in, and whether they offer all of them, I suppose, or just a few. Whether they start going beyond Bitcoin into the other cryptos, Ethereum, and the sort of upcoming potential ones. But yeah, we'll see. The ETF space is getting quite weird. Got a smaller offerer. It's called Cyber Hornet. A little bit strange. I'm not sure whether you'd want to put too much money with them, regardless of the product. But yeah, the products are weird. They're launching a 75% S&P 500 and then 25% of three different cryptos in three different ETFs. So either 25% XRP, 25% Ethereum, or 25% Solana. So S&P 500 and XRP seems a little bit strange, and 25% to that crypto is probably a little bit strong, and a little bit more than sort of the majority of people are going to want to have if they want this kind of, stock market with a little bit of crypto as a kicker. I'm not sure they would want 25%, but there you go. I don't think it says whether that is staked crypto as well, which would sort of provide a reasonable bit of gain as well. Solana sort of getting 8 to 10% on staking rewards. So yeah, just I would say getting a little bit strange. Bit of an opinion piece on Cointelegraph as well. I just thought it was quite interesting, noting the increase in open interest on CME Bitcoin options. Jeff Park sort of noting like that is all-time highs, and sort of saying what does Wall Street know? What would they be using these options for? It could be downside protection and sort of hedging and that sort of thing. They're not tremendously bullish. We don't know whether it is calls or puts, I don't think, just from this, but it could even be covered calls. And they're saying this is how Bitcoin gets to 10 trillion market cap, with sort of increased use of derivatives, selling covered calls and things. BlackRock have a new covered call Bitcoin ETF, so that sort of reduces downside, giving you a little bit of protection from selling that option income, but also makes the upside less dramatic, sort of caps your upside. So if you start seeing billions and billions of this, then you could have lower drawdowns and less on the uptrend. But yeah, I suppose that would be becoming more mature. And this seemed very, very unusual. SoftBank and ARK, good old Cathie Wood, are looking to make an investment into Tether. So they don't take a huge amount of investment, and it's sort of noted that they're very, very profitable. So sort of things that they need to do, they tend to just do with cash flow, and they're sort of throwing around cash flow, investing it in various things, sports teams and agriculture firms and all sorts. Almost as if they don't know what to do with it. So why exactly they would want a $20 billion investment seemed a little bit unusual. But they presumably want to push into the US. They're launching a separate crypto sort of to comply with US rules, USAT from the looks of it. It's sort of not launched yet, but yeah. tweet from Paolo saying that they want to maximize the scale of the company's strategy across all new, existing, and new business lines, stablecoins, distribution, ubiquity, AI. Not sure what they mean in the AI side, commodity trading, energy, communications. So there you go. And he calls them Teva the stable company as kind of maybe a little bit of a nod to previous critics, sort of saying that they were going to cause the entire market to implode, and seems quite the opposite at the moment. They currently have 173 billion in Teva, which I think is up about 30 billion this year. So yeah, very strong. And sort of the big note, of course, being that this $20 billion investment is being made at an up to $500 billion valuation. So that would, if they got that would put them higher than SpaceX, and sort of potentially, depending on prices paid, level, if not maybe a little bit more than OpenAI. So it would make them the highest valued private company in the world, with sort of it's always a little bit of an unknown number, but some people say 100 employees. Sort of, if you doubled it and said 200 employees, it's a little ridiculous compared to what these other companies employ. Pretty sure it makes them the most profitable company per employee in the world by a long way. Just quickly checking in on helium as well, sort of one of my smaller holdings, but I like to just check how they're getting on. And they made another new high on daily users yesterday, so that's quite good. A slightly marginally higher high on data transferred, so all good. And hotspots sort of continuing to trickle up. They had a spike up on early August and continuing to trickle up, and mobile sign-ups sort of continuing along this steep line upwards, although, as I say, that does include free users. So yeah, it's not all super profitable, but yeah, nearly sort of getting towards 2 million daily users is very strong, I would have said. The Bitcoin hash rate continues to slightly concern me. Did sort of rocket up to 1.2 zeta hash. Hasn't quite reached that peak from last Saturday, 1.41. But yeah, isn't exactly helping. Looking at the difficulty predictor, so we're up to 142.5, and it's currently showing 9.5 minute block times and a 5.26% increase coming Wednesday. So it would take us just shy of 150. This was earlier this week. This was sort of in the 157, 158 range, which would have got me a little bit spooked. Even now, 149.3, like just a couple of weeks ago, or 3-4 weeks ago, we were at 129.7. So 150 is not great, and does significantly hurt the profitability of the Bitcoin miners. And with Bitcoin at under 110,000 now, it doesn't look good for the companies that are all in crypto. You can see even CleanSpark, who were basically all in crypto, are now starting to make noises of pivoting to AI. So yeah, could do with some people switching off, but I would imagine this is companies with free electricity continuing to plug in, and that will be probably the future for Bitcoin mining. And global liquidity chart has sort of basically broken down. It could come back, but yeah, I think we have to sort of firmly say this has broken down for now. We got a sort of big spike up this week, actually, in the sort of delayed, this is 12 weeks delayed global liquidity, but yeah, there was a spike up. This is global M2. Admittedly, some people are saying there's things that should be included that aren't included in global M2, sort of the Treasury general account at the US, and sort of various bank reserves and things. So yeah, M2 itself isn't maybe the best indicator, and some indicators are sort of showing a little bit closer correlation. But yeah, you would have thought this would be somewhat close. Admittedly, it has before 2024 seen, quite large divergences, much more than this. But I was kind of thinking the ETF introduction is what had brought this a lot closer in line with sort of institutions, buying and selling this based on money expansion. But for the moment, at least, it's still broken down. A couple of people have noted the sort of Treasury general account has been being refilled over the last couple of months. They wanted to get from sort of $200 billion up to $850 billion, they say, is their sort of comfortable number that they want to be at, and they are pretty much at that now. So sort of that would indicate, when this started to break down, was about then. And sort of you've had this sort of 2 months of going nowhere while global M2 increases. So yeah, that sort of Treasury general account, basically, people are saying that sucks liquidity out of the system as they sort of try and increase that balance to 850 billion. It's drawing out liquidity that could go into other things. So who knows? We could, if that's over, now get a sort of very positive end to Q4 this year, and we could start rocketing back up to close to the line, and then we would just call this a relatively large divergence, possibly because of that Treasury general account, or possibly for other reasons. So coins for the week, as I say, it's been a rough altcoin week. Bitcoin down 4.7%, which certainly doesn't help things. That's rather large. Solana down 15%. That had been doing very, very well. Obviously, my sort of total of that is still in the NFTs. So Solana going down probably doesn't affect me quite as much as you might think. Ethereum down 10%, Chainlink down 10.3%, Metaplex down 5.3%, Helium down 8%, Jito, actually the worst performer for the week, down 15.7%. Radium is down 18.7%, and Honey, Hive Mapper token, down 6%, although that is really hanging down there as my sort of worst performer by far. I sort of put broadly the same amount into a couple of these altcoins, and Honey sort of has performed worse, or certainly Metaplex. I actually put a little bit less than Honey, and the least of all of them, and it is, I need to reorder these actually, it's actually on top at £1,591. So well done, Metaplex. So it's been a rough week, but I'm sure we can come back from this. The sort of drawdowns, Bitcoin's down like 12% from the all-time high. It's sort of very, very little. Previous bull markets, 2017, we had 5 drops of 30 to 35%. So yeah, we're getting less drawdown, but sort of less explosive upside, I would say. But yeah, leave your thoughts in the comments below, and like and subscribe. See you soon.